Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, January 9th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We had an incredible session in the previous day here where the range on the session was tremendous in size. You'll see here that based on a one-day look back here, we have the biggest day we've had over the last 4 or 6 months. This has been a very, very large day there. It was over 350% of average range. The last time we had something that big here was back in August. We had a few days, all down days during that time. So the biggest day in terms of range since August, a lot of that range occurred in overnight with the sell-off and pre-market with the rally, and then it extended it quietly the rest of the session higher. And right now we're sitting at highs. And here's the deal. When you have such a large range like that, there's a tendency for price to trade in a smaller range the following session or perhaps the following couple of sessions. This market appears to be very, very bullish right now. But one thing I would watch is this previous high right there, because that previous high is going to tell us a lot. We have kind of an expanding range that's forming here, and after the recent rally, it wouldn't be out of the question to see this thing continue to build out a bit like this. You can see this profile over here is very thin. Everything else this way is much fuller. And so you can see that right now, at the moment, we are sitting right at that high. And if we develop a day or two up here where we hold but fail to get going higher, that could suggest that we fail back to this low, and then we probably see an even bigger move on the next wave up. So that's the idea right now, watching the previous high. Obviously everything continues to suggest more upside, and any pullback is still a buying opportunity. After a high range day, expect trading range behavior the next session. But right now, if price can hold here, call it 32.65 today, perhaps there could be a continuation higher toward 32.75 and beyond, at least on a short-term basis. Okay, let's take a look now at the NQ. You'll notice here the NQ has very similar price action but much more bullish. We had another day here that was tremendous, 294 points of range when it had been averaging just 119. So that is a tremendous size. Again, biggest size day that we've seen since August, when we had a few of those big heavy down days. Over here we continue to trend higher. This low right here bounced right off the top of the pivot range. Very significant rejection and turnaround, and we're also on highs here. Again, not much of an expanding range like the ES, but similar characteristics nonetheless. We are holding completely above the prior pivot high here. And if we cannot extend the thing higher, then that could lead to a pullback. Call it 8,600, and then we may see another reverse move right back on up. So this market remains bullish. Any pullbacks continue to remain buying opportunities, and continue to watch that prior pivot high just above 8,900. All right, lastly here, or next, let's take a look at crude oil. You'll notice here with crude that the range is not only large, it is significantly larger than even what we saw in the ES and the NQ yesterday. This range was 520+% of average range. And in recent memory, I cannot remember a 500+% of ADR day. There have been 300 and 400% days, which are very rare but do happen, but 520+% is something significant. And you look down here, the range for the previous session here, 6.5 points. It takes a very long time to find something else that large. I believe you have to go back to 2015 to get something that large there. And again, way back here somewhere just to get something comparable. And that right there is not even that big. So this was a significant day. It's happening at a zone here where you would think a rejection would occur in general, because it has. So you can see right here the 64.65 zone, 64.65, 64.65, right here, and now right there. large outside day. The idea is that we're likely going to continue lower toward 50 to 52. That's recent support. That's just the trading range we have right now. And after the last time we got this high based off the Saudi strike, we saw a pullback all the way to 51. Then we rallied back up, more strikes over here, this time with Iran, and we're seeing this thing pull back again. A move back toward 52 could easily be ahead for this one. Now, one thing to keep in mind is after you have a large range day like we see here, it is not out of the ordinary to see 1, 2, 3, maybe even 4 days of range-based action here before we see the next move. And you know, you can go right back to this price action right here. That was a Saudi strike, huge up day on a big gap, big day down the next day, and then here, after that wild movement here, we had 1, 2, 3, 4 days of compression followed by the break and continuation. So it would not be out of the ordinary to see further range-based type of trading action over the next few days. And then once that's done, we may see some sort of major continuation that takes us toward 52s. So that could be ahead here for crude oil. We'll keep an eye on that. If we take a look lastly here at GC, you'll notice another big range, high range day in the previous session. Again, you can see right here it's about 60 handles, 59.9. One of the biggest days we've seen here, not over the last many years, but big day. This one was 57.2, and that was back in August as well. So big time movement here for this one. This one looks a bit different here because, again, we have just gotten the expansion here up, and right now we're seeing a bit of a rejection inside the PEMA trigger zone. So we saw this huge explosive move to that high, 1613.30, and then we saw a big reversion to the mean, and this is the first time we're testing the PEMA trigger zone after the explosive breakout from the channel. So this suggests another major opportunity to buy ahead of the next continuation up. Now, if price were to fail here, say it fails to hold 1540, again, that 1525 level is the big level. I mentioned before that we could drop back as deep as 1525 and still be a buy. 1525 failure to hold that zone will fail this thing. But right now, again, the way it's looking, it looks fairly bullish here. The intraday time frame looks really good here with a pretty sharp rejection on the low, followed by absorption and continuation beyond VWAP. You're seeing that rejection signature in the 15-minute chart and 60 as well. So this looks really solid right here. Again, buying right now could be an opportunity to push this thing higher over the next 5 to 7 days, or perhaps even the next 1 to 2 weeks. So we'll see how this plays out. All right, that is it for now. We'll see how this develops the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.